What is the VA funding fee? How much is it? Why do you have to pay it? And how do you avoid it? Well, I'm gonna break all that down in today's video. You see, the VA itself does not lend you money. They just guarantee the loan 25% to the VA approved lender. That's why the terms of VA loans are so much better than other loans, because that 25% guarantee in case of default is basically looked in the same matter as if you put a 25% down payment. That's not why there's no private mortgage insurance. That's why there's a lower interest rate. That's why there's potentially no down payment involved. It's all because of that guarantee. Now, how does the Department of Veteran Affairs afford to do this guarantee? Well, they charge you what's called a funding fee. Now, the amount of the funding fee is completely going to vary based on how many times you've used your VA loan benefits, how much down payment, the type of VA loan you're doing. So for example, if you look at this chart here, the VA funding fee for a first time use with no down payment is 2.15%. If you look at the subsequent use, meaning you've used it more than once with no down payment, it jumps all the way up to 3.3%. Now, there's some instances where it may make sense to look at putting a down payment even if it's not required, because if you look at subsequent use for putting 5% down, it's substantially lower than if you put 0% down. Now, for VA cash out refinances, it's going to be the same funding fee across the board. If it's your first time use, it's going to be 2.15%, and if it's your subsequent use, it's going to be 3.3%. Now, with the second most popular loan, the VA IRRRL or the VA Streamline Refinance, it's going to be 0.5% if you have to pay it across the board. Doesn't matter how many times you've used your VA loan benefits, doesn't matter what the LTV is, none of that matters. It's 0.5% if you have to pay it. So you may be thinking, Tyler, I don't have enough to pay for this VA funding fee. I barely have enough for closing costs. Well, that's not an issue because the VA allows you to roll in the funding fee in full with your loan. It's the only closing costs that you're technically able to roll into your loan. So if the funding fee is $6,000, but your purchase is $300,000, you'll be taking out a loan for $306,000 to pay it. That's what 99% of people do instead of coming to closing with extra cash to pay for it. Now, how do you avoid the VA funding fee? Well, it's simple. You just have to have a 10% or higher disability rating. Here's a really cool part. If let's say you're in the middle of a purchase while you were possibly waiting for your rating to be awarded to you, and that claim was in process by the time you started your purchase, you may be eligible for a VA funding fee refund. That's right. If you close with the VA funding fee while something's in process and you get awarded 10% or more, you could submit that to the VA and they will send you a refund in full for the funding fee. So yes, while maybe it's an extra closing cost and an extra fee that you have to pay when using the VA loan, it's what fuels this great program to help so many veterans buy a home. Now, if you don't want to pay it, just have a disability rating of 10% or more. If you don't want to come to closing with it, just roll it into your loan amount. So hopefully this video is very informative on the different types of funding fees, why you have to pay it, what good it does. And as always, please let me know if you have any questions in the comments below. Thank you so much for watching. Make sure to click the like, subscribe, share. All of the engagement helps my channel grow. So thank you so much. I appreciate you, and I'll catch you in the next video.